Goldman Sachs planning to cut jobs starting in January, up to 8% of the workforce. CNBC.com's Hugh Son reporting on that story joins us now. Hugh, given how much they grew over the past couple years and how in demand talent was, what does this mean?
It means a couple things. First of all, the bull market for talent on Wall Street is over. So, if you've been at home and sort of playing it out and waiting to see and resisting your manager's calls for you to get back to the office, that is over. And that's over very soon. And a couple things. I mean, first of all, comp has been up, has been up pretty strongly. Last year was such a strong year. The boom obviously has turned into a bust. And when that happens, I think people have to be a lot more sort of humble and open-minded about what comp is this year, except for the people who will get bageled. There are hundreds of people at Goldman and doubtless thousands of people on Wall Street who are going to get zero bonuses this year. And if that's the case, that's a message from management to say, look elsewhere.
Why? What changed? I mean, we all know that the environment for equity performance has been pretty woeful. Bond performance has been pretty woeful. Has deal-making offset any of that? I mean, fundraising has dried up. So talk us through all the reasons why this is happening. Yeah,
I mean, you hit on all of the highlights. The deal pipeline is down 40%. Not as bad as, equity capital markets, which is down closer to 80 or 90%.
Wow.
Obviously, IPO market's completely frozen. When is it going to open up? Do you know? I don't. And so, there was a strain, and I went on with you in June and talked about what we thought was going to happen. It came to pass. So the lack of activity in capital markets has sustained. We don't know when that's going to come back. And if you're David Solomon, you're sitting at your desk on 200 West and saying, when is it going to come back? Do we maintain the capacity, hold on to our people, or do we just cut bait, close up now, and if we have to, hire again, and again, this gets back to hire to fire, right? Sure. Which is unfortunately the cycle on Wall Street.
So where are we in this weather pattern? A few weeks ago, you broke the news about, was it Wells Fargo and the mortgage business and layoffs there. Now we got Goldman Sachs coming up beginning of January, 8%. It's kind of a significant number. Is this rolling through? Is there another shoe that we should expect to see drop in February, March?
I didn't think there was, and now I changed my mind. So, last week we reported 1,600 job cuts at Morgan Stanley. For them, they have a stable business, wealth management, annuity-like returns. I think they're done. I suspect they're done for the cycle, at least for a few months. Folks like Goldman Sachs are much more highly levered to these capital markets businesses, unfortunately. That's why they tried to go into Marcus. They're retrenching there. That sort of failed. So if you're really levered to these sort of boom and bust capital markets businesses, can you maintain your troops on the ground? And I think for a lot of folks, this is a sign that there'll be potentially rolling cuts between now and through the first half of 23.
It's pretty significant when we talk about Goldman's Marcus foray having failed. And if that's true, and that strategy of kind of build a consumer business from within to kind of rival the steadiness that maybe a Morgan Stanley now has, if that didn't really work, what does it do now? And does it invest in something further here at a time like this when it's otherwise retrenching or not? And if not, is that going to come back to haunt it again in 5 or 10 years' time?
This tells me the people at Goldman Sachs, the partners and managing directors who never agree with this foray, this venture into consumer, they won. And, it leaves David Solomon with the same pickle, which is he's leading a company that is over-levered, 60% capital markets trading or investment banking. And those businesses don't merit a great return because they're up and down. And so how do you diversify? Now, it seems like they're going to get further into wealth management. Everybody wants to get into wealth management. It's not easy. If you want to buy your way into wealth management, it is high multiples. And so he's stuck in a position that he was when he took over as CEO, which is he's in charge of the best brand in investment banking and trading, arguably, but over-levered to investment banking and trading.
Right, exactly.
Wow. The danger in being an Apple supplier. Right? You don't necessarily get Apple's results, even if you're supplying financial services, as Goldman Sachs was with Marcus. You keep breaking the news.
Yeah.
Hugh, thank you.
Thank you, John.